Which pair should we pick? Mr. John, welcome, sir. Can you hear me?
Can you hear me? Yeah, I can hear you, brother. You have to.
Okay, what
I just got home.
So which pair should we
so
look
which
at?
pair should we look at?
Or should I just take people to what I have in mind? Let's
Yes,
play
so
out.
take what you have in mind, sir. Thank you.
Quite some time now, I've been on good, just good. I've been trying to study that guy.
You don't like anything.
uh
Then I've been paying attention to news as well. So I am trying to add it to my strategy, and I've been studying it so hard. And I
this is
guess
good.
I grabbed some things over there.
My chart.
My chart.
So this
So
was the last
this was the
demand
last
area,
one area,
and we
and
had this huge
we had this
momentum.
huge momentum.
This was
This was
liquidity grab
beauty
last
grab
week,
last week,
and then
and then it
Please,
can
just kept.
just kept.
I think the mic is echoing. Okay, so yeah, we had this demand, hammer candle, morning star, momentum push into a new high. Now, when we literally closed below, we retested it and all the way down. Now, this place, a lot of people would actually have lost money here if you are not careful, because most people would want to sell this resistance, but gold literally cleared the resistance, cleared the high, and literally did a liquidity pull and closed back with a break of structure. Now, all this was just in a test to come back and sweep the recent liquidity that has been created here, because there's actually going to be some imbalance around where my arrow is. So immediately we got there, we had this left shoulder, head, right shoulder, triple touch around 200 period moving average, which also happened to be previous demand zone. And if I actually was to draw a trend line from maybe H4, or because this is H1, if I was to draw a trend line from H4 or D1, I'll probably have an uptrend confluencing this place. So this is what I call confluence. So the moment I actually saw this, or I knew that where gold was actually continuing momentum. And the beautiful thing about it is this. Like I say, me, I prefer to trade with the trend. So until there's a confirmed change in the trend direction, gold is actually still going to be buying, coupled with news, which also USD has been weak. I don't like. There's been a whole lot of factors affecting USD, so gold just kept gaining strength. So now we're actually expecting two things. Is either we sweep this high and break out into a new all-time high, or there will be a rejection of this area, and then we might literally be selling lower. But economically speaking, using fundamentals, I don't see that happening, because gold is actually still very much stronger than USD right now. And besides that, there's been a whole lot of reserve agencies that are literally using gold as their backing for some of their funds. So, yeah. With that said, any questions or any contributions before we pick another chat? Please feel free to raise your hand or react. Do you have anything to add to what we just noticed or discussed? I want to pick another pair. Can I go ahead? Can you
Yes,
guys?
sir, you can.
All right. So let's go to BTC. Then after BTC, I want to take people to a different place. So let's go to BTC. Where is BTC? Now this is BTC so far on this 4 hour time frame. Now on the 4 hour time frame, we've literally been in a downtrend after the sweep of liquidity here. Now the liquidity literally started from this area. There was a new all-time high, 124,071, and immediately we rejected that area. We had a hanging man on the H1. This would be a hanging man on the H1. Of course, if you sold from here, you would have made good profits. And we kept seeing lower highs and lower lows. There was a little bit of a range here, and then our previous support zone now became resistance area here. And after that, we had this huge move down, a pullback into the recent supply area, and then another lower low, lower high, which happens to be this recent supply area that was created here, and of course all the way down to 100 and I think 105, 107 thereabout. Yeah, 107. Now this was a previous demand zone. If I zoom out, this was this recent demand zone that price shot up from, and this is the first time we're approaching that area after series of, I think, days if not weeks. So now of course there was a huge influx of orders around this area, because this, most people will call it an order block, but for me it's demand zone, extreme demand zone. And after which we had a double bottom here and a break of structure retest. We had a close above candle, a retest of fair value gap. There was a fair value gap here on H1, and then we happened to close higher, higher highs, higher lows, higher highs, higher lows. Now as it kept making higher highs and higher lows, we noticed, of course, it kept creating new fair value gaps, new imbalance. There was an imbalance here. So after the high, price literally came all the way down to retest it, and we kept making higher highs and higher lows. Now, as long as we kept seeing higher lows, we are definitely still in an uptrend. But now this was where it got interesting, because at this point now we had a previous supply area, and now this supply area, price literally had first retest, second retest, and the third retest, closing with this bearish candle. Now averagely, most people would have sold here expecting that, okay, that's if you were trading resistance, you most likely want to sell here. But now at this point, we had a break of that equal high, price closed above, pulled back into the recent low, which happens to be the recent demand, and then another new higher high. But now this area, which if I zoom out a bit, happens to be the most recent supply area that has not been liquidated. Price has not gotten here by any chance. The last time price came close was this one, and we literally sold all the way down. So now price is approaching a new or a recent interesting area, which is this supply zone created here. And immediately we had a double top, and of course a double top chart pattern, followed by lower highs, lower low, lower highs, lower low. Now the interesting part about it is price is currently at this demand zone, which is recent, but now there's every possibility that this will hold, and there's every possibility that it won't. So the best entry or the best structure, if we were to trade BTC, will be, let's go to H1. Now on H1, what do I have? On H1, this recent demand zone, price actually has broken the structure here. So I have a new higher high or equal high, but now it's a recent supply zone, and from that area, price sold all the way back into the last demand zone. Now, if we have a close above candle above this area, that's an bullish engulfing candle above this area, then we should most likely be expecting that this trend should continue. Now, why would I say this trend should continue? Is because coupled with the demand zone, I can see that the last time price retested the three moving averages, which is here, this higher low here, we had a huge impulse move into the highs, and this move literally gave us, I think, almost about almost 555 5,500 points. So if you use 0.01, that would be about almost $500 on BTC. So now this same structure, this same setup is almost happening here. Price retested the three moving averages, closed above it, and we had a new break of structure. Now price is also coming back to that same area, and it happened that after testing it, which of course there was a little bit of a break of this structure here, but we can't completely say because immediately we had an engulfing candle that followed, which happened to close above the area. Now pulling back, we have a higher low, higher high, higher low. If I still have another higher high, then my uptrend is confirmed because from the 200 period moving average, which is actually a large combination of data for 200 period um, price action. So if price literally is retesting the 200 MA and I'm happening to be seeing engulfing candles closing above my structure, that tells me that there is a build up for bullish momentum run and increase. So yeah, uh if not, then if we have probably a retest of this recent supply area here and price rejects it with a bearish engulfing candle, then I should be looking to sell the lower high all the way down. So I could still go to 30 minutes most likely and see what 30 minutes would actually give me. But from all indication, we might most likely be longing BTC for some time. So I don't know if anybody has any contributions or any questions before I go to another chats. Any contributions or any
I'm just
questions?
trying to
You said
understand how I'm trying to understand how you are using this moving average,
moving
this
average,
oscillator, I mean, what they call it, is it OC, so something like that, movie
oscillator.
average, because yeah,
Okay.
it's actually having so many kind of rules that's like attached to it, but I don't just understand how it is. Maybe that should be part of the whole
What the hello? Good
I'm
afternoon.
done. No,
Hello, can you hear me?
yes, I can hear you.
All right. Okay. Do you want me to shed a little bit of light on that? How, like, some of the rules that we use based on what I have seen that works?
Yes, yes, actually, because I keep saying it's like consecutively over time,
Yeah.
this moving average. And then there's this one they will use again, this Asian high something. I
Yeah.
don't know if you use it.
I've
And
not.
this Q Q
QRT. Hello.
sir, I can hear you.
Okay. So
Yeah.
what me I do most times is, first of all, I use it in as like more of like a confirmation of trends. Now we have simple moving average, we have exponential moving average. Now, simple moving average is it takes like the regular data, while exponential moving average is a bit more detailed. Now, what we do is if you are using, let's say you use 10 moving average, what you are telling the indicator to do is take 10 days of price action data. And you remember drawing graph is like in school back then, maths, when you are drawing graph and then you're trying to connect points, and when you connect those points it tends to give you like a curve, maybe to the upside, or you connect them down and then it gives you a curve to the downside. Now what moving average is basically doing is it is picking the close of those candles, the highs and lows of each candle for that period of time, and using it to plot a similar graph pattern for you. So now if I use 10 moving average, that means it is taking a 10-day price action data to plot my lines. If I use 20, it is using a 20-day data. If I use 50, it is using a 50 days data. Now if price has been trending over a 50-day period, of course that tells you that the farther away price is from the 50 moving average, it is expected that at some point in that movement it's going to pull back towards the 50 moving average. Now when it pulls back, because it is literally expressing the trend, anytime it pulls back to that same 50 moving average, you are most likely expecting that the last time it did what it did, which it pulled away from the 50 moving average, if it comes back to it again, it will most likely pull away from the 50 moving average, breaking it into a new high. So if you look at it, as long as you keep staying above your moving averages, that means you are in an uptrend. Now, if you keep staying below your moving average, that means you are in a downtrend. So if I am above my 50 moving average, my 20 moving average, and my 10 moving average, of course, that tells me that that particular price chart has been in a strong uptrend, because now it is not just the 10 days, it is using 10 days, 20 days, even 50 days. It has just been buying. Now, if I do the same for a sell, maybe a bearish pair, for instance, the more I see it respect lower highs and lower lows, staying below the moving average 10, 20, 50, that tells me that that downtrend is actually still strong and is going to continue stronger. Now, if you are looking at these charts, for instance, I don't know if you can hear me, please.
Yeah, I can hear you. Can hear you, but you can use your pointer. Be
Okay,
pointing. Let us be. Yes, sir.
all right. Now, on this chart, for instance, let me go to daily. I want us to do something. Now, on the daily chart, for instance, if I zoom out, what we have is this. See the last time price literally broke above. I don't know. You're seeing where my arrow is, please. Can you see my cursor?
Yes, you can see your cursor.
Okay. Now, the last time price broke above the 50, this is 50. I use 50. This is black is 200, yellow is 100, and then the wine color is 50. Now the last time price closed above the three of them, it retested it with an engulfing candle, and then we had this huge move. Now for this period of days, this is a daily chart on BTC. Now for this period of days, which is about maybe I think maybe 20 days or so, almost a month. Now, for this period of a whole month, BTC literally was in an uptrend. Now, at some point, it retested, it closed below the moving average. Now, made a lower high and then a bearish engulfing candle. What happened? Literally had to sell back into the fair value gap that it created here. Now, of course, because I know it's stayed above the three moving averages, I am still expecting it to be in an uptrend. So everything else that is happening in between is most likely a pullback or BTC trying to retest liquidity that it has created, because all this liquidity that it's created under here, it will definitely want to come and sweep it before it continues going higher. Now, if I draw a trend line from the start of that move, it intersected with this block area here, this other block here, which happened to be a fair value gap here. But now, what got interesting is immediately it got to this area, we had an engulfing candle, which happened to still break structure above the 200 MA. It ranged for a while, happened to close higher above the three of them again. Now it has closed above the 200, it has closed above the 50, it has closed above the 100. Immediately it did that, coming from this fair value gap, I am of course it has given me more confirmation that that uptrend that it literally did the last time it broke above the three moving average, it is most likely going to do the same thing now that is repeating the same pattern. And immediately it did that, we had this move, another long move into this area, which at this point now, price, I think this was, yeah, this was the new ATH, and we had a break of structure, exhaustion, another break of structure. Now of course, people that literally took buy positions at this initial move would definitely be taking profit. That's why we had these significant corrections. But now I am paying attention to see, okay, what does price do again around the moving average? Now, if we look at what we have here, this is daily chart, so most of this data now is compressed. But now this is 200 MA. For some time now, price has not come close to the 200 MA on the daily charts. Now, I'll just identify that area. Now, if you look at it, this is equal low here that resulted in this move, created a small demand zone here. Now, immediately price came to this demand zone around this area. What happened? We had a bounce. Now, it did not come all the way down, so that tells me that for some reason, there's still some liquidity under here that should most likely be filled someday soon. But now I'll just keep that area. I'll mark it with this rectangle. If I now go lower, this was the area that I reacted from. But now on the daily time frame, it has not crossed 200 yet. It has not even approached 200. I think on daily time frame, it is still where it is still okay. On the daily time frame, it pulled back, closed above 100, it pulled back, closed above 50, but it has not come anywhere close to 200. So what that tells me is it has created some liquidity in this area. So there's every possibility that price might literally react to a zone which happens to be somewhat recent supply that it has created here, and after that retest, maybe sweep liquidity here, it will most likely drop to come and retest this 200 period moving average. Now, immediately price nicks this area, I can tell you for a fact that the next move that you most likely see is going to be a very, 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 very massive move to the upside. Now, this is how I combine moving average with structure. Now, the higher the moving average, the higher the time frame area, or the higher the liquidity area that I am expecting it to cover. That's why when you use this setup or structure or approach, sometimes it gives you room for huge movement. And now, sniper entries. I can literally close eyes and tell you that the next time price comes to 106,647, I'll most likely be expecting a huge buy from that area and break even all the previous highs that it has created. But now this is just data, so it does not mean that I don't like it. I don't like setting pending order. When it approaches that zone, I'll still want to see what is happening. Just the same way like I have here, I had this sell, and it happened that immediately price closed below, all what it did happened below the moving average. The next time it came close to that area, lower high, we sold, pulled back, we sold. Now, as we can see here, I am starting to break above the 3 period moving averages. Now it has broken above and used it as a retest around this higher low, creating a new high. So that tells me that as long as this uptrend is to continue, I should be expecting price to react around this next moving average area to continue buying. If not, then I should most likely expect a break of structure, pull back, and then sell below. But if it keeps respecting my moving average, then my uptrend is actually still strong and I still have potential of looking for long bullish moves rather than taking short bearish trades. Does that make sense, Ma? I hope I didn't lose you at any point, please. Did that come along? Did you understand any bit of? Did you pick anything from what I said?
Yes, sir. I tried to.
All right. So
Maybe I'll learn other things on my own. But what time frame best suits such this thing?
for daily 4 hours, then entry on H1 or 30 minutes or 15 minutes. Now, normally when you do your structure on HD1 or H4, you most likely now go and start looking for things like candlestick patterns on your lower time frame, your chart pattern, your fair value gap, break of structure, other blocks, and the likes. But now, why I like to use that is because it gives me the bigger picture of where the market is still going. Because if I'm in an uptrend, my bullish moves will be longer than my bearish moves. So I would not be taking a bearish move that would most likely give me maybe 50 pips, 80 pips, and immediately price before it even gets to take profit, price literally reverses. Except I want to scalp, which I don't scalp. I don't scalp. I prefer to swing trade if at all. So yeah, since I am swing trading, if I have the bigger picture, I want to trade with the momentum of the trend. Just like gold now, if you notice for the past months, you hardly see me sell gold because we are in an uptrend. Selling gold would mean going against the trend. Now it's not wrong because you can catch moves in between, but the disadvantage is you're going to be catching small moves, which is good. But then if you want to actually catch longer swing moves, then you want to trade in line with the bigger trend momentum. So anything you want to add for us? Anybody, please? Anybody has anything they want to add for us? I don't want to be the only one talking. Let me learn from you people too.
Anyway, mm-hmm.
So,
Me, I don't have
yeah,
anything to say. I don't know. I'm just looking at the chart.
yeah.
Okay.
But now, from what we can see, we're already retesting the 50 moving average. Now, if we keep staying above the 50, that means the trend is quite strong. But it is expected that as long as this uptrend is still going to, like, if bull run is going to happen in 2025 on BTC, for instance, we are literally going to have to retest the 200 MA at some point, and any entry around that retest is going to be a good buy position.
Okay. Nice one. I'm going to check it out, sir.
Yeah. But for now, me, I don't think I want to advise anybody to take a buy yet, because
Mm,
we're at resistance, we're at supply zone. Anything can happen.
when the supply turn resistance, we go pull funds inside.
Ehen. So yeah, let me just show you people. Do you know Mexi? Can you see? Okay, I think I'll share a different screen. I'm coming. I want to share my screen. Um, okay. Come in, please. I don't know. Can we see my screen, please?
No, yes, yes, yes. We can see your screen.
Okay, so for starters, we are going to be introducing crypto trading very, very soon, and this is the platform we are going to be using. There are others though, but this is like top performers in that space. They have thousands of pairs. So yeah, I don't know if I know Mr. John. At least me and him have we've done one or two on this space before, so I know Mr. John is quite familiar with this whole future trading. But I don't know, Miss Gladness, do you have any experience trading futures or sports?
I don't have any experience trading features, trading crypto, and that's where I want to turn my life into now.
Still not all my life.
I don't have strength again because forex bar is crypto is what's this word? It's just the money is bigger than forex nítorí
The
Ọlọ́run.
liquidity is massive.
Let's just be honest. We'll learn all the OT what to learn.
Yes,
Let's learn
so
the block and everything. More go pack the passion enter crypto.
enter
Now
crypto, honestly. So yeah, later I'll drop link so that we create an account so that we can start practicing. Now let me see if I can just do a run through of some of the concepts behind this thing because I'm actually recording this session. So yeah, okay. So yeah, when we say futures, well, it's literally the same thing as forex. That's the crazy part about it, but it's a bit different because you're not just trading, buying and selling. Yeah, you're actually trading like the future prediction of where you expect price to go. And now, uh, things you can pay attention to. We have under futures, we have USDT-M futures, we have Coin M futures, we have stocks and the likes. But then most people trade USDT-M futures and Coin M futures. Then as you improve your experience, you now start doing more. Now, when we come here, we have the coin against the stable coin. Now that's the crypto coin against stable coin. In the crypto space, of course, there are stable coins and then there are active coins. Stable coins are the coins that their value is fixed with the dollar. It doesn't change. Those are the likes of USDT. Meanwhile, active coins are just the likes of BTC where their value varies at a particular point in time. Now we have what we call um, margin. Uh, Now when you're trading futures, just like forex, you have your margin, but now the way futures margin works is different. They give you a percentage and tell you the percentage sometimes 10. I think for Mexi has 20. as maximum. Let me see if I can see it. Now the beautiful thing about it, what amazes me about crypto is the same thing you are doing on forex literally works on crypto, and it's almost like there's no serious difference aside the entry and exit approach.
Exactly.
Now, of course, so you want to take a trade. You If you open long, you are predicting that okay, from this current price, it should go higher. If you short, you are looking at from the current price, it should go lower. And yeah, for your margin is how much they want you to leverage, and you can increase it here. uh Maybe if it's 10, if it's 5, if it's 20, if it's 100, the more the better, but you're not advised to use it because it's volatile. Now, of course, we have the normal our tools by the left side, the time frame, the candlestick, and you have your indicators. um Now there are different types of order. We have market order and we have the limit order. The limit order is the last price you want to either buy or sell from. Once price gets there, just like the same forex, you open your position, set your take profit if it's long, and your stop loss if you are shorting. And now we also have markets order. That one is instant. And then we have trigger price, just like the limit orders. But then you set it, and when price approaches, excuse me, when price approaches that area, it literally would just trigger your order. And now this is your multiplier. Your multiplier is how much leverage you are risking and how much leverage they are multiplying for you. Now, I think you can go as high as 500x, but just they said choosing high leverage such as 200x increases liquidation. So if you are trading low balance, yeah, you don't need that much. I think max for beginners is 20x to start with, and yeah, that will determine, of course, if you are using stable coin, it will, whatsoever you are doing will be calculated in your stable coin, either $1, $5, $10, 50, depending on what you are risking. And if you are using the volatile coins, the active coins, it just works with whatsoever value, 0 point whatsoever it is you want to use. And yeah, this is where you can choose the different crypto pair you want to trade. And recently, Asta has been buying like crazily. I think it has done over 1000%, and currently it is at a resistance. And just the same way we have on Forex, see the moving averages here too, doing almost the same data that the the Forex one does too. But of course, uh I think I don't know, I just from my what I've been paying attention to, I noticed some of those technical terms even work better on crypto than even forex pair, because forex pair there's a whole lot of sentiment and markets, economic data and analysis at different times. But crypto, the data most times is one direction. If we are bleeding, we are bleeding. If we are buying, we are buying. Like if there's problem somewhere, you know how you see it affect the market. It's just that okay, it's fast when it wants to happen. Sometimes in minutes you can cover significant movements, which of course forex too does that. But forex is very unstable because I don't know, I feel like the human emotion is battling with forex a whole lot. So yeah, this is where you can see your positions. If you have positions open, I don't have any right now. Your orders, that's active position order. It may be pending, market, whatsoever. That's where you see it. Your position history, all the positions you've taken, long or short, your trade order or trade history, your capital flow. This is how much you have plus or minus, and this is how much asset you have in total. Okay, when you add it together, all your accounts, what is inside in total, that's if it's 1 BTC, 5 Ethereum, whatsoever, that's where you see it. And yeah, I think mhm, which what else? Yeah, isolated margin. I did not talk about that. Isolated margin is we have two types of margin actually, isolated and cross. Now, isolated margin is if you are opening multiple different positions. Let's say you're opening a trade on BTC and you want to at the same time open a trade on Ethereum and at the same time open a trade on, let's say, TAU USDT. The isolated margin is you are saying that your margin should be different for the three different commodities you are trading. But cross margin, you're saying that everything in your account, your margin in total should work for all of them. So if let's say one of them is in a red, your cross margin will close the three trades. But if you use isolated margin, if one of them is in a red, it will just close the trade for only that and leave your other two trades running. So yes, for beginners, it's advised we use isolated margin. And yeah, that said, let me see. There are a whole lot of, like, it's unlimited, but yeah, just like we have the USDTM, we have the USDC, which is also another stable coin, and then you have the coin M. And now in this space, there are two categories actually. Apart from all these futures trading and the likes, we still have the DEX, but that one now I'm still trying to do a whole lot of gather a whole lot of data on it. When I do, then of course we'll still add it as well, because yeah, our aim is diversification of portfolio and multiple income streams generation. So with that said, I think uh, I've been able to say just do a run through, but of course we're still going to be having subsequent classes, analyzing charts and the likes. This video is almost over, but by God's grace, in subsequent classes, we're still going to be having different analysis, lessons, and stuff to improve our experience as we keep learning. And please, um, it's not only me that is teaching. I want us to on our own, whatever we gather to, let's share knowledge. Let's whatever you notice. Nobody's an island. It's a never ending learning process, please. So if anybody notices anything that they feel like, okay, we can talk about, learn from, observe, pay attention to, please feel free to bring it to our attention. So with that said, any contributions so far before we call it a day? Can you guys hear me? Any questions or contributions before we call it a day? Hello?
Yeah, I can hear you, sir. Thank you very much. Oh. So I this
This
makes
makes
this makes
makes a
just
that's
yeah,
yeah.
because
That's
Mr. John,
Mr. John.
Sir?
please let me mute. Let me hear Miss. You said what, Miss Gladness?
I said this makes it
Yeah,
like if I was to go and register, like open new accounts and all that.
yeah,
It's just for trading features
yeah.
and
Crypto. You can.
crypto.
It's
Okay.
also like an asset wallet. You can store your crypto there too. Like,
Just like Derive.
yeah, just no, just like Bybit, Binance, and the like.
Okay. Yeah.
Yeah. So those ones are more of like a decentralized exchange. You can literally do anything on it that has to do with crypto. You can even sell your crypto NFTs on it. Sef.
Okay, sir. Please, I better send us link. Let us
Yeah,
register.
after this class, I'll drop the link so that we can create it because we will not be only focusing on gold. So that when gold break our hearts more, we go to crypto DK.
Sharp, sharp.
All right, guys. So, Mr. John, you wanted to say something. Sorry.
No. I'm okay. You have answered it
Alright.
already.
Uh, I guess this is where we're gonna call it a day for today. Until when we see again, meet again. Let God spare our lives by God's grace. So, thank you guys for having you on the call.